Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The chip rout deepens, sending global stocks lower. Double-digit declines in SK Hynix and Samsung, pushing Asia towards correction territory. Oil and gas, meanwhile, fall further as President Trump says there's a good chance of a deal with Iran. Tehran, though, denies formal talks are taking place. And a fashion fail for luxury giant LVMH as sales disappoint in its key division. We'll bring you the numbers from European corporates, including Barclays, Mercedes and Unilever. Well, a very good morning. Here's the picture in markets this Tuesday. We have to start in South Korea because the Kospi's been halted twice so far this session on declines of more than 8%. Currently, the Kospi down nearly 10%. And that puts the broader MSCI Asia Pacific Index set for a correction. Now, the bad vibes for chip makers are going global. Europe less exposed, of course, to tech. So Euro Stoxx 50 futures only down or flat to the downside. But Nasdaq futures down 0.8%, also on concerns about circular AI funding. Now, flip the broad cross asset and you can see all of this is despite oil falling even further on President Trump pausing daily strikes against Iran, saying that there's a good chance of a deal with Tehran, even if Iran disputes that. So Brent extending yesterday's decline, the biggest decline in more than 3 months. We're down another 1.3% to $87 a barrel. WTI flirting with $80 a barrel, and Treasury yields have been dropping as a result. The 10-year down 2 basis points at 4.62, setting up Kevin Warsh's second meeting at the helm of the Fed. Plenty ahead. Let's get you started. We begin with breaking earnings out of Germany. Mercedes reporting its second quarter results and the car maker lowering its full year guidance, citing weaker demand in China. Of course, you've seen this prolonged property slump there and that undermining consumer sentiment and curbing demand for luxury vehicles. So some of the key numbers here, they see their full year revenue slightly below the prior year. They had seen flat year on year. Second quarter sales coming in at 32.06 billion euros, just shy of the estimate. Adjusted EBIT for the second quarter, 2.3 billion euros. That's actually a beat on the estimate of 1.72 billion euros. So really, this had followed BMW already lowering its profit guidance in June. So Mercedes not able to preserve its own. This theme of China weakness really plaguing the European car makers this morning, but in particular the downturn in China putting pressure on the CEO of Mercedes, Ola Källenius, his push to take Mercedes further up market, making the company more dependent on wealthy buyers just as China's economy is losing momentum. Difficult times for the company, as you can see. But now let's turn to broader markets, and stocks in Asia slumping this morning as a global rout in chip makers continues to deepen. Let's go straight to Avril Hong in Singapore. Avril, just take us to the root of the sell-off that we're seeing this morning. What's going wrong in South Korea?
Yeah, I mean, this is the global backdrop that you're seeing, right? Those concerns about the circular nature of AI financing at the time where China seems to be making a lot of progress on lithography manufacturing, reportedly at least. And that is the double whammy you're seeing for Asia stocks. As you highlight, South Korea, you're seeing the region's benchmark, though, down about 10% from the June peak, so correction levels. And think about as well how it's not just South Korea, the Nikkei, the TAIEX, they're also getting hard hit. But to your point, the circuit breakers have been rolled out in South Korea today. Let's flip the board and take a look at this next chart. I just wanted to highlight the size and the scope of the selling. So today you're seeing the Kospi at these levels. They are almost the worst session we've seen it at since the month of March. And if you think back to the losses that is already accumulated since the June highs, that is about 30+%. Roughly in that time, the stock of SK Hynix has lost about $570 billion in market value. And I think one analyst really put it best today that the greed has turned into fear for AI investments, and the year's biggest AI winners are looking very much like losers today. Now flip the board again. As for the progress that China is making on lithography manufacturing, I know you guys got a teaser, a taste of that with the ASML declines at the Europe session. This is the Chinese read-through. We're seeing the lithography stocks, they are rallying, some of them by limit up 20%. But think about how for these Chinese chip makers, with such progress, there could be more capacity, and that could also put compression on the valuation. So you're seeing a lot of them coming under pressure in trade today, with Hua Hong Semiconductor leading those declines. Lizzie.
Avril, thank you. That's Bloomberg's Avril Hong. And let's dive more deeply into tech, shall we? Nasdaq futures also pointing lower, pointing to further tech weakness on these concerns about circular AI funding, including $750 billion worth of deals announced by Nvidia. Now, it adds to the increasingly interconnected web of dependencies between tech manufacturers and AI startups. So let's get more now with Bloomberg's Anthony Stevens. Anthony, we already saw Nvidia knocked off its perch as the world's most valuable company yesterday. How can Nvidia make sure that the AI build-out continues without stoking worries about circular financing? Good morning.
Morning. Yeah, to some extent, some of these dynamics are out of its hands. What it's trying to do at the moment is to use its amazingly cash-rich balance sheet to kind of backstop some of its fast-growing customers until their own organic cash flow starts to pay for this data center investment. Now, the most of the data center credit is starting to struggle here on the CDS market. That's because people are concerned whether these data centers can pay for themselves, given how resource efficient the Chinese LLMs are starting to become. So that's really out of Nvidia's hands. The efficiency gains made by the Chinese, whether those prompt increase usage of AI or it reduces the size of the pie available for data centers, that's largely out of Nvidia's hands. What it's trying to do is to kind of help balance sheet short-term constraints of US LLM makers that are its key customers. Also, it is helping kind of other data center providers down the road in easing their financing concerns. So they're being a good citizen in the non-Chinese part of the AI ecosystem, but they have precious little control over the open weight Chinese part of the ecosystem, and it's developments there that are starting to really take on this flavor of increasing momentum on both the hardware and the software side that is starting to worry people on the CDS front from a fundamental level and from a supply front from the supply level, as Avril was hitting on the semiconductor space.
Well, yeah, just talk to us a bit more about the Chinese threat to European tech, because we also saw, as Avril highlighted, ASML shares hitting their lowest since early June yesterday, dropping more than 8% in Amsterdam on this report from the information that a Chinese state-backed company had started making precision chip-making tools, ASML's specialty, of course. How big of a threat are these DUV machines to ASML, Anthony?
Yeah, so deep ultraviolet technology is one step below ASML's top-of-the-line technology of extreme ultraviolet technology, right? But it provides the vast majority of chip-making etching. So a lot of DUV is needed, and then a tiny sliver of EUV goes on top of it for the top-of-the-line GPUs or HBM. So what is happening here is more that people are pricing in that China knows how to make these DUV machines and can start to work down the line of producing components such as MLCCs, substrates, and DRAM, NAND, all the stuff that is just one step removed from the absolute top of the line. Now, at the moment, even at the extreme of this reporting that China can produce 20 machines into 2027, this is a tiny sliver of ASML's sales. It's more the momentum of the technology progress of China that is catching the eye. It's starting to build pace across the software and the hardware ecosystem, and that is starting to replicate the moat that Nvidia and ASML had in the Western ecosystem, a combination of hardware and software together. And that is what's causing the panic reaction, not only in ASML shares, but in all of ASML's suppliers and customers in Asia.
Super helpful context. Anthony, thank you so much. That's Bloomberg's Anthony Stevens. Well, let's turn to the macro now, because the Fed is set to begin its two-day policy meeting today. Markets pricing a near 40% chance of a rate hike this week. And Citadel Securities says it expects a move higher, warning markets against underestimating the extent of the Fed's hawkish shift. You've also got analysts at Bank of America and JP Morgan seeing the central bank's commentary pushing yields higher. Well, let's bring in Ben Ram, cross-asset strategist at Bloomberg MLive now. Ben, I'm looking at Brent lower again today, down 1.3%, $87 a barrel. And yet, the chance of a Fed hike this week is edging closer to a knife edge. Do you buy the argument that a move this week is needed for Fed credibility to prevent inflation becoming more entrenched?
Morning, Lizzie. I absolutely buy the argument that the Fed should be raising rates. What we are seeing in crude prices have tumbled for a third straight day, yes, but it is the longer-term trajectory that matters. And as I was saying yesterday, the average price of Brent crude is something like $88 a barrel this year, as opposed to $68 a barrel last year. And that's what matters for importers, and that's what matters for manufacturers' input costs. And the Fed, by its own admission, thinks that inflation core PCE is going to be 3.3% this year, and it also sees above trend growth. Those are conditions. Given those macroeconomic projections and given what has happened to crude this year, they should absolutely be raising rates. In fact, you could argue that the rates are no longer restrictive. So they need to raise the rates ASAP, and whether they will do it or not today is the million-dollar question. As you said, that Citadel Securities is calling for the Fed to be raising rates, but if they did that, Kevin Warsh would immediately increase his credibility in the markets. Of course, the markets were thinking earlier that, he's Trump's man. Is he going to be able to stamp out inflation? But what we've heard from Kevin Warsh is all undoubtedly hawkish, and he has said before that running inflation above 2% is a choice that we make, and now is the time for him to prove that he means what he says, and therefore it's a golden opportunity for the Fed to be raising rates. And if they raise rates, they will set a cat among the pigeons in the markets. Bonds will sell off, yields will move higher, shift vociferously higher, and that will rattle through the other markets as well.
Ben, thank you. Indeed, President Trump, even just yesterday, saying that rates should be lowered, reiterating that position. Ben, thank you very much. That's Ben Ram, cross-asset strategist at Bloomberg Live. Well, let's go to the heart of the oil and gas price declines. President Trump saying that the US and Iran are engaged in diplomatic talks to end the conflict in the Middle East, even as Tehran has said that no formal negotiations are taking place. But Trump also warned that the two sides would return to fighting if negotiations don't result in a deal.
They want to meet, and we're meeting. We'll see what happens. There's a chance we could make a deal. Without what we did, they wouldn't even be talking to us. They requested a meeting through their surrogates and directly. And we're meeting, and, good things can happen, I guess.
Let's get more detail now with Bloomberg Horizons Middle East and Africa anchor Abir Abu Omar. Abir, Trump says give talks a chance. He's set to meet Israel's Netanyahu today. How likely is a deal with Iran looking right now?
Good morning, Lizzie. That's a very good question, a difficult one to answer at this point now. As you heard, President Trump was just saying that a deal could happen, yet another breakthrough. He did say that if it doesn't happen, they'll go back to hitting Iran just like they were. So look, this back and forth is kind of the name of the game. It's what we've been seeing happening over the past 5 months or so. President Trump had said multiple times over the course of this war that a breakthrough is possible. That came in the shape of the MOU that was signed in Switzerland about a month ago at this point. But then we saw the escalations happening in the region. 13 consecutive nights of strikes by the United States on Iran that ended on Friday, Lizzie, without any explanation. Now we know that Axios reported earlier this week that Admiral Brad Cooper, that oversees the operations in the Middle East for the United States, said that the attacks needed to end because they were no longer effective. Now this is Axios citing their own sources. The New York Times also reported that the United States had halted the attacks because it was running low on ammunition. President Trump said the U.S. has more than enough ammunition, but that he would like to have more. So you're seeing, again, this back and forth in all of this. We know that Bloomberg reported a scoop about Iran and Oman meeting to discuss restarting movement through the Strait of Hormuz. And so this is at the heart of all of this, the Strait of Hormuz, but also the Red Sea. Lizzie, we're seeing parallel movement between the Houthis that are Iran-backed in Yemen, hitting facilities in Saudi Arabia. We also reported a story about smoke coming out of a major energy facility in Saudi Arabia, Upcake, and that exports about 7 million barrels a day. Now, we don't have confirmation from the Saudi side as to why that is happening, or if it's true that the Yemeni, the Houthis in Yemen had in fact attacked it. But then we're seeing all this movement. Actual, tangible conversations between Iran and the United States are not yet reported. And so to answer your question in a nutshell, could a breakthrough, yet another one, be happen? Possibly. We're not seeing signs of that happening. We're keeping a close eye, first and foremost, on the Strait of Hormuz and the movement there, to be able to determine whether whether oil markets are interpreting the moves there the right way. For the time being, movement there is pretty much paralyzed. Ship owners are still having to go through Iran and the United States to seek permission on whether to go through the waterway or not. And so this is the reality of the situation on the ground, despite Brent crude prices below $90 on the barrel this morning.
Abir, thank you so much. That's Abir Abu Omar on the latest developments in the Middle East, our Horizons Middle East and Africa anchor, of course. Well, let's turn to some of the risk events on the agenda for today. At 7 a.m. London time, top of the hour, we'll get more earnings from Barclays and Unilever. Given we've already seen blowout results from Wall Street, we are looking to see whether Barclays can beat trading revenue expectations, even if they still trail US rivals. Unilever's volumes, meanwhile, could be under pressure from those elevated oil prices that Abir was discussing. Staying in retail, also at the top of the hour, we'll get German retail sales numbers. And then at 3 p.m. London time, we'll get US consumer confidence data, expected to have weakened in July on those Middle East tensions, pushing gasoline prices higher and, of course, adding to uncertainty. But still ahead on Daybreak Europe, wildfires in France and Spain stabilise, but a new heat wave looms. We'll get you more from the region later on in the show. But first, Ukraine's president heads to a meeting with President Trump in Washington after securing jamming technology from the UK. We'll get you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the UK has agreed to share technology that can jam Russian air defence systems with Ukraine. The agreement to share the so-called Stone Cloak system came as the Ukrainian President Volodymyr Zelenskyy became the first foreign leader to visit Britain for talks with new Prime Minister Andy Burnham. Zelenskyy now heads to Washington, where he's expected to meet US President Donald Trump. And we can get more from Tony Halpin now, who leads Bloomberg's Russia government and economy coverage. Tony, good morning. I mean, Zelenskyy's had a tough time at home recently, hasn't he? What does he need to bring back from these trips abroad?
Well, I think a couple of things. That jamming system from the UK will be very useful for Ukraine in helping to increase the effectiveness of its long-range drone strikes in Russia. It's been targeting things like oil refineries, defense plants, logistics centers to try and step up the pressure on Vladimir Putin's economy. And as you say, he's meeting with President Trump this morning in Washington around 9:30 DC time. He's looking there really to cement the warming in relations that has happened recently between him and President Trump. He's hoping to discuss more support for air defenses for Ukraine, because while Trump's given him opportunities to produce Patriot missile systems in Ukraine, there's clearly going to be a time lag, and they have a deficit now that they're hoping to fill with more supplies. And things like increasing sanctions on Russia, again, to intensify the pressure on Putin, try to bring him to the table to bring a negotiated end to this war.
Yeah, for now, no sign, it seems, of a resumption of that US-led peace negotiation between Russia and Ukraine. Anthony Halpin there, thank you so much for the latest on the situation in Ukraine. But coming up, a fourth summer heat wave brings renewed wildfire danger to Spain and France. We'll get you the latest from the region next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, wildfires in France and Spain that forced the evacuation of more than 300,000 people have stabilised, but the start of the summer's fourth heatwave means little respite for emergency services. During a visit to Bordeaux, the French president underlined just how unusual the circumstances are.
Firefighters from across France are on the ground with around 20 firefighting task forces, unprecedented aerial resources, and more than 1,500 military personnel deployed. We are facing events we have never experienced before.
Meanwhile, the Spanish government says that the situation remains very, very complex. Let's bring in Bloomberg's Madrid bureau chief Rodrigo Orihuela now. Rodrigo, good morning. Just talk us through the extent of the damage seen in Europe so far.
So, as you mentioned, it is quite unprecedented. One of the officials in France was saying in recent days that these are a type of fire that maybe are more common in places like Canada and Australia, but are rare in France. They're also rare in Spain. So it is something that people are not used to. The Interior Minister in France yesterday did make the point that he is not being reassuring, and he is making a point of not being reassuring because the fires continue to exist. They continue to blaze, and he doesn't want, and until they're not off, he cannot say he cannot be reassuring. The final point, just as a sign of a kind of size and scope, in Spain, this is already the biggest fire ever. The one of the specific fires, the one in the region of Avila, west of Spain, of Madrid, which is heavy in forests. That fire itself covered about 55,000 hectares. And that's the one that's the biggest ever. This specific one is contained, but others continue, and firefighters are still at it. And the main issue, to my final point, as a final point, is that today the heat wave in both countries is supposed to come back.
And yet, the Spanish Prime Minister Rodrigo is saying that summers like this are the new normal. I mean, the scenes that we were just showing on the TV are hellish there. Are they likely to provoke a bigger rethink, greater policy action when it comes to climate issues?
Well, it is certainly something that the Spanish government has been talking about for some time. Obviously, in this specific case, it's so big that it brings it more to the forefront. It is also close to Madrid, which makes it easier to or draws more attention, the same as the French one, which is near Bordeaux. So a lot of attention is focused on it. Some people have been speaking about the size of these fires a lot for a while. The Spanish Prime Minister has called for what they call in Spain a national deal to fight climate change. But the other party on the other side has already said now is not the time to talk about this. So the question there is, will there be a rethink, as you say, or not? I think the answer lies in how open are parties to discuss climate change and its impacts, which seem to be the main reason behind this, and also spending in a way that is not visible. A lot of the spending and the prevention work has to take place by cleaning forests and woodlands and scrublands during the winter and spring months, and that requires certain investments which it's not clear that everybody's open to making at this stage.
OK, Rodrigo, thank you very much. Bloomberg's Rodrigo Orihuela, thank you so much for the update there on the wildfires. Now to some of the stories we're following for you this morning. Bloomberg Economics says that French consumer confidence data out later today is expected to show a gradual rebound in the second half of the year. Consumer confidence is at its lowest in more than 3 years, but the figures will offer an early signal of the effect of those successive heat waves. GDP data out on Thursday is expected to show the French economy avoiding recession. Well, those are some of our top stories this morning. But coming up on Bloomberg Daybreak Europe, why the latest LVMH results suggest the summer season could be an uncomfortable look for European luxury. That's next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The chip rout deepens, sending global stocks lower. Double-digit declines in SK Hynix and Samsung, pushing Asia towards correction territory. Meanwhile, oil and gas fall further as President Trump says there's a good chance of a deal with Iran. Tehran, though, denies formal talks are taking place. And posh products under pressure. Mercedes cuts its full-year revenue forecast while sales disappoint in a key division of LVMH. Both companies pointing to weakness in China. Well, a very good morning if you are just joining us. 6:30 a.m. here in London, and we have to start this market check in Korea. The Kospi down 10.6% as things stand. It's been halted twice so far this session on declines of more than 8%, and it puts the broader MSCI specific index set for a correction. Now, the bad vibes, as you can see, are going global. Euro Stoxx 50 futures down 0.2%. It's less exposed, of course, to tech, but Nasdaq futures down more than 1% now, also on these worries about circular AI funding. Now, flip the board cross asset, and you can see all of this is despite oil falling even further today on President Trump pausing those daily strikes against Iran and saying that there's good chance of a deal with Tehran. Tehran denying that, as I say, but Brent down 1.2% to 87.30 the barrel this morning. WTI flirting with $80 a barrel, and Treasury yields dropping as a result. So we've got the 10-year yield down 2 basis points at 4.62, setting up that second meeting of Kevin Warsh as Fed chairman. Now, let's turn over to the front pages this morning, starting with the Financial Times. It leads with the AI stock sell-off, saying it reflects growing investor doubts about the durability of big tech spending on AI infrastructure. Meanwhile, if we come to Europe, we can look at Les Echos out of France, saying that French industry is on the front line against those wildfires we were just discussing with Rodrigo in Gironde, with defence, energy and chemical companies taking measures to protect their strategic facilities. Finally, if we look at the Wall Street Journal this morning, it says that Meta is fighting a mountain of social media lawsuits at just the wrong time. The paper saying that the litigation could cost Meta billions just as it's going through an expensive AI transformation. Well, you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which Terminal subscribers can find by going to DAYB Go. Now, let's turn back to earnings, specifically in the luxury sector. LVMH's key fashion and leather goods unit, home to Louis Vuitton and Dior, barely eking out sales growth last quarter as the conflict in the Middle East has deterred wealthy shoppers. Organic sales at the division, the group's most profitable unit, rose 1%, missing the 1.52% estimate of analysts surveyed by Bloomberg. With me now to discuss is Jelena Sokolova, senior equity analyst over at Morningstar. She joins me in studio. Good morning to you. So let's start off with LVMH, because you've actually got LVMH as a top pick, I note, despite these results we saw yesterday. The share's down about 28% so far this year. What are you seeing that investors are missing?
Yeah, so I think we at Morningstar, we like to take a long view of the companies, and we do think that the company still has exceptional quality of the business. So it has one of the most profitable, the most prominent brands in fashion and leather, of course, sorry, with Louis Vuitton. It also has absolutely massive communication budget, which which is above all peers, and which makes the company being able to reinvest behind the brands to support their standing. Of course, longer term, if you look at longer term pictures, fashion and leather goods division actually outperformed the industry for the last 10 years. It delivered double-digit growth versus kind of 5% performance for luxury goods. So current decline for the last 2 years for this division comes on the back of extremely difficult comparison base after the pandemic. That's also something to bear in mind.
So how patient do investors need to be to see, for example, the hiring of Jonathan Anderson at Dior bearing fruit?
Yeah, so typically we see that after new designer hires, the results start changing a little bit after a year or a year and a half. So we are about entering this territory now for Jonathan Anderson at Dior. And notably, the company also said that Dior actually outperformed the fashion and leather division sales overall. So that's an improvement. So there is a little bit of improvement so far, but of course it's not sort of yet very meaningful.
I'm glad you mentioned leather, because a big question I want to ask you is whether you think that the Haaland effect is going to be real. We've seen the footballer Erling Haaland with his Hermes man bag. Is that going to show up in results down the track?
Yeah, so that remains to be seen. Also, we have seen male athletes increasingly wearing jewelry that supported also jewelry sales before. So that could be, of course, another kind of leg up to the industry. Of course, Haaland is especially popular with female viewers rather than male viewers so far. But of course, another influencer, kind of genuine celebrity supporting brands, could be supporting factor.
And you mentioned jewelry. Are there other bright spots outside of what's becoming known as hard luxury?
Yeah, so hard luxury has been actually a bright spot so far this year. We have seen strong results from LVMH's watches and jewelry, but specifically from Richemont for its jewelry divisions, but also for the likes of Swatch, even delivering quite a nice growth. So we kind of see a broad shift from soft luxury, where maybe pricing has been a little bit more aggressive immediately post-pandemic. Consumers basically are shifting to jewelry and watches where they perceive lasting value.
So you're broadly very optimistic on the luxury sector, despite the headwinds from the Middle East and what we've seen as weak Chinese demand. We were talking about that in the context of Mercedes. Why are you seeing these signs of stabilization?
Yeah, so historically, luxury downturns lasted about 2 years. We're now in a third year of kind of softness here. We do see initial signs of recovery. So the recovery so far is driven primarily by the U.S. market, where we see both supportive equity markets so far, which, of course, given recent trends, remains a risk in itself. But so far, the results there are supportive. They come also on the back of much easier comparison base, because there has been a spike after the pandemic, and then it went down, and now basically the growth is from a healthier base. I still see potential for Chinese consumer resumption of purchases, because they are still sitting on those savings once the real estate situation stabilizes and sentiment improves. So we see very, very early indicators of that happening. And of course, you have wealth created in different sectors, AI being at the forefront of it.
Well, on that point,
yes.
I mean, surely a lot of people might lose their jobs because of AI. So how can we be sure that that won't outweigh, the wealth effect where people make money off AI and they buy luxury goods with that money?
Yeah, so that could be an offsetting factor. So that is a risk for the sector, the kind of the dampening factor of AI on high wage employment specifically, because of course higher wage employment would be most affected if that happens. We already are seeing it on the entry levels with entry level positions with some jobs. So of course that presents a risk going forward for the sectors. But on the other hand, there will be also wealth created from those companies flowing through. So far, it's hard to say whether AI is kind of one way, kind of a positive or a negative.
Okay. Jelena, thank you so much. Really great to see you. Glad we got to talk about Erling Haaland there and get to see him as well. Jelena Sokolova, Senior Equity Analyst over at Morningstar. Well, coming up, we will continue on the earnings. The Mercedes cutting its outlook in the latest sign of weakness in Europe's autos industry, and we'll get the details for you next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Turning back to Mercedes earnings, which of course we broke at the top of the show. It's cut its full-year guidance, citing weaker demand in China. Now, this is just the latest sign of weakness in Europe's autos industry after VW cut its outlook last week. Let's get more now with Elizabeth Berman, who leads Bloomberg's coverage of EMEA autos. Elizabeth, good morning. We already had some bad results from BMW as well. How different is the picture for Mercedes? It seems to be quite the challenge for the CEO's strategy to pivot to luxury.
I would say that they're pretty similar, but then, of course, there are some sort of details that are quite different. So BMW, they warned about a month ago that they won't meet their annual profit guidance, whereas Mercedes actually cut back the revenue forecast, which is in line with what we heard from VW last week. And the leading factor here is, again, China. Both VW and Mercedes had severe market losses there, outpacing an overall downturn in the market, which is also what's really undermining, specifically at Mercedes, the top-end luxury strategy that the CEO, Ola Källenius, put in place roughly in 2021. If I'm not mistaken, if you've got fewer buyers in China going for your S-classes, for your Maybachs, which is where those models were very successful, the overall strategy to sell many more of these cars is going to be a lot weaker. So that's what Mercedes specifically is looking at. What they also told us this morning is that they'll hone in more on costs and productivity gains, which is again very much mirrored across the German peers, across VW and BMW.
We just had an equity analyst on from Morningstar who was very optimistic that China is at an inflection point. What's Mercedes' outlook for the second half of the year?
I was very interested in the comments that your guest made there. I'd be very hopeful for a turnaround in the Chinese market, and which would put us on course to write more positive stories on these car makers. But from what I gather is that the property slump in China is so severe that consumer sentiment really has taken a hit, and that, of course, extends to buying cars. And then again, as we've mentioned many times before, this increased competition in China is really a struggle. In terms of Mercedes, what is helping them somewhat at this point, which I thought was pretty interesting, is yes, we know them as the maker of cars that are instantly recognizable, but they also have a very successful unit that makes commercial vans. Whereas the return on sales in the cars unit was around 4% in the past quarter, it was more than 10% for the vans. So they have a little bit of leeway where they can also do better and try and push their products a bit more, other than just the cars that we all know so well.
OK, Elizabeth, thank you very much. That's Bloomberg's Elizabeth Berman. Well, turning to more earnings that we're expecting this morning, Barclays is expected to report an 8% jump in global markets revenue this morning. This is according to analyst consensus compiled by Bloomberg. The global markets unit contributed over a third of the bank's revenue in the first quarter, underscoring how the business underpins Barclays' global ambitions. Bloomberg's Charlie Wells is following this story for us. He joins me now. Charlie, just start us off with the top line numbers then. Talk us through expectations for the bank's overall performance.
Well, the expectations are high. And Lizzie, what I would say is that the setup going into this reporting season for Barclays and a lot of these other banks has been really positive. But the comparables are tough, right? The comparables are tough on the other side of the Atlantic. So JP Morgan, Goldman Sachs really had blowout quarters. And if you think about equities trading, that's really been the theme of this season, right? Really that volatility helping these trading desks. But if you compare, we were talking about that 8% increase in that markets unit for Barclays. But if you think about what that translates to, if you think about what's expected to come from trading at Barclays, that equates to about $3.3 billion. Compare that to JP Morgan or Goldman Sachs. They brought in $12 billion. So again, there's a really difficult comparable there. Think about BNP, their equities trading desk, that they saw an increase of 43% reporting that last week. So again, Barclays, the setup is good, but the comparables are tough going into this morning.
OK, so that comparable to year on year and the comparable across the pond difficult. American investment banks, though, trampling earnings records. So might we see optimism for Barclays?
I think we should. There's really high expectations going into this. And I think this season here in the UK and other parts of Europe, I think it's going to be really interesting to look at some of the differentials, right? That theme of equities trading getting a boost from volatility. Yes, likely to see that. I think something interesting that came out of BNP that we should watch for is this slight increase in loan loss provisions, right? Does credit come under stress here because of slightly more exposure to geopolitical risks to Iran than we see in the United States? We should be looking for some commentary on some regulatory changes coming from some of the other banks we're likely to see. But again, really, I think it's that equities trading business. And again, some rates positivity as well in Barclays today, right? Higher for longer, at least up to a point, can really benefit some of these banks, particularly here in Europe.
Okay, Charlie, thanks so much for setting us up for those earnings. They will be dropping later on this morning, and we'll be hearing from the Barclays CEO himself, CS Venkatakrishnan, on the opening trade at 7:15 a.m. London time. Now to some top corporate stories we're following for you this morning. Other earnings stories. Audi cutting its full-year sales and profitability outlook as worsening conditions in China, a theme, as you can tell, along with US tariffs and the Middle East conflict, hamper its turnaround efforts. The Volkswagen-owned car maker now sees operating margin as low as 5%, with revenue of at least 58 billion euros compared to an earlier forecast for 63 billion euros. Meanwhile, we've got Philips slumping on TradeGate after reporting a fall in second quarter sales in China. Again, a theme in its largest unit. But the Dutch health tech company has raised its 2026 profit margin forecast after a US tariff refund boosted second quarter earnings. It also reported strong order growth in Europe as it works to offset higher costs from tariffs and the conflict in the Middle East. And we'll be hearing from Philips CEO Roy Jacobs on the opening trade as well to discuss those results later on this morning. That conversation coming at 8:45 a.m. London time. Elsewhere, Johnson & Johnson has agreed to a proposed $5.5 billion settlement to resolve most lawsuits claiming that its talc products caused ovarian cancer. The deal requires support from law firms representing at least 95% of the plaintiffs. J&J denies its talc products are harmful, but the agreement could bring a close to litigation that's hung over this company for more than 15 years. And Bloomberg understands that an Nvidia employee has been detained by prosecutors in Taiwan who are investigating the alleged smuggling of AI accelerators into China. Sources say the employee's home has been searched, as well as his desk at Nvidia's office in Taipei. Nvidia is yet to respond to a request for comment. Well, those are some of our top corporate stories for you from around the world this morning. We've got plenty more coming up for you. We'll dive into the concerns on circular AI funding. That's next. This is Bloomberg.
When you cut through some of the chip financings and some of the data center financings, ultimately what they're supported by are cash flows and leases ultimately to investment grade counterparts, and many of those being the hyperscalers. And so there is a element that you may be secured by an asset, but ultimately what supports that asset is a obligation or a cash flow from a investment grade corporate.
Carlyle Investment Management's head of asset-backed finance speaking there. And let's just unpack some of that tech financing risk now, shall we? As you can see, credit spreads for Alphabet and Oracle at their widest on record. For Amazon, they're the widest since 2018. And for Microsoft, the widest since 2011. But flip the board, and yet, in terms of percentage share in the share price, change in the share price, Alphabet is leading the hyperscalers. Now, flip the board one more time, because fundamentally, the US investor base has a pretty high tolerance for financial engineering, shall we put it. And yet, it seems like the patience is being tested. US credit markets drawing the line at Nvidia, backstopping OpenAI so that SoftBank gets better terms for a data center, which SoftBank lends OpenAI money to open, which really crystallizes the market's concern about circular AI funding. The words of Michael Burry of Big Short fame, around and around we go. Just how much of the AI capex cycle represents real monetizable demand? That remains the fundamental question here. Now, to get all of these charts and the others that we've used on Bloomberg TV throughout the day, do go to CHRT TV Go if you are a Bloomberg Terminal subscriber. And let's also just remind you of the risk events on the docket for today. In just a couple of minutes' time, top of the hour, we'll be getting earnings from Barclays and Unilever. On that theme of retail, we'll also get German retail sales numbers at the top of the hour too. And later on this afternoon, 3 p.m. London time, we'll get US consumer confidence numbers. Now, let's check in on these markets again, because we have seen absolutely wild moves when it comes to the South Korean index. The Kospi has been paused for trading twice in the session so far. It's on track for its worst day since March. The Kospi now down 10.4% as the chip worries continue. That is infecting the global picture as well. Of course, here in Europe, we're less exposed to tech, but Eurostoxx 50 futures still down 0.2%. Nasdaq futures down more than 1% as well, which also comes back to those fears about AI circular financing that we were just discussing. But it's a big day for earnings as well. Coming up, earnings conversations with the CFO of Man Group and the CEOs of Barclays and Philips. It's going to be a wild ride on these markets today, so factor in those earnings as well. But all of these conversations coming up later on Bloomberg TV. The opening trade is coming up next. Anna and Guy will take you all the way to the European cash open. Brace yourselves. Stay with us. This is Bloomberg.